Welcome to Bears in Exile. Today is May 5th, and we had a big day in the market. We're going to look at the Dow, the SPX, the VIX, and TNA. Here we have the daily Dow. You'll notice that the target we gave for it last night of 12,625 was met and exceeded for a bubble corrective move. So this bubble is fixed. And what the Dow decides to do from this point is its own decision. We do have slightly more crossover on the short-term moving averages, but not excessively so. Of course, the long-term moving averages are still in effect. The chart overall is still bullish, and whether or not we come down and test the bar, we need another bar of data to tell us. You know, the most predictive value right here was when we saw the downtick, we were able to give it a target. It met that target. Now we need more data. So, and it should be noted that right about here on the chart, big drop. They changed the rules on the oil traders today. They took out the 10% circuit breaker and replaced it with a 20% circuit breaker for 1 day only, extending the losses of the oil sellers and bringing down the oil companies by a large amount, and creating this big old bubble right here. On the 15-minute it has an uptick. On the 30-minute it does not. On the 60-minute it does not. Therefore, can we expect an uptick tomorrow? Highly likely, but not guaranteed. So, will the move continue down in the Dow? We need more information. Although it is very likely to me that it will have a bounce of some type. You know, it's not guaranteeing a big old green bar. You know, it could only be an intraday sideways move and then down it goes some more. But for the moment, we do not yet know if it'll reach all the way to the bar for a test. And that's the Dow for you. SPX, we had the bubble corrective target met yesterday, and it continued down today with the Dow. We do have more crossover on the short-term moving averages than the Dow does. We also have less distance in between here and the bar for a test. One thing to notice, though, is this line right here. That's the head and shoulders, reverse head and shoulders neckline, and we're sitting right on it. So if the bulls are right, this is going to pop off here and go on its merry way up. If the bears are right, it's going to break through it, close below it, and fall apart. And either one could be totally correct. So tomorrow is critical, and will hopefully give us some direction as to whose theory is right. The market is saying that, the chart looks like it's going to come down for a test of that bar. And you know what? It could hit the bar and bounce all on the same day, enough to still clear this neckline. You know, who knows? Maybe it'll fake people out, close below it, and then the following day close above it, and we need another bar of data. It just comes down to that. TNA, you'll see that we do have a, this isn't a reversal candlestick, but it is completely different from the other ones, whereas it's mainly a small body with a big old upper shadow instead of a big old body and a tiny lower shadow. So that looks positive to me. This one has even more crossover than the S&P, but you'll notice that it's just barely entering the bar. and we don't have a complete crossover before entering the bar, so that is very positive. That tells me that the entry into the bar will be shallow, because typically you have to have complete crossover and separation prior to entering the bar, in which case it will normally put the hurt on the bar or penetrate the bar. Putting the hurt on it is second from the furthest moving average, and since we haven't met those criteria, I would say that it's going to be shallow before it pops out of it and has to try again. And of course, just like the S&P and Dow, we have all kinds of damage thanks to oil, and I'm sure thanks to silver too. But just like the other ones, we need another bar. It's just as simple as that. And the VIX. You would think that the VIX would be much stronger looking after a dream day for it, like today. I mean, silver crash, oil just totally screwed up, and and the Dow losing triple digits. Instead, the VIX has this little, wimpy looking, almost an indecision bar. That's exactly what it is. It's a spinning top. So, that's, you would really think that you'd have a big old green candle here, but no, you don't. The long-term moving averages are starting to point up a little bit, and we do have crossover on the short-term moving average, but it is not complete, and it has already started to penetrate the bar, suggesting that it should not put the hurt on the bar, and it should not fully penetrate the bar. So it looks to me like it'll come up and kiss it and either sit there or fail, but just based upon the strength, separation, and angle of the short-term moving average, this does not look strong at all for the VIX, doing any real damage. So, I mean, if you compare this to the VIX in the past, you have like complete crossover and expansion prior to entering the bar. That's when it hurts it. Complete separation and crossover before entering the bar. That's when it hurts it. Same thing. This is much weaker. Trying to find an example. See, right here, that's a good contemporary to the situation now. It goes into the bar, can't even get through it, and pops out. It's the exact same, well, it's very similar. It's not exactly the same. Nothing is ever exactly the same. But, yeah. So there you have it. That's the market overview for tonight. Unfortunately, we don't have any more predictive value beyond that bubble on the Dow and the S&P, and we need another bar to get a good sense. As always, all investing decisions are your own, and this chart and video are for entertainment, educational, and consumption of time purposes only.